Good morning. This webinar offers closed captioning. To enable closed captioning, click on the live transcript button on the bottom of your screen and choose your preferred method. Welcome to the City of Chicago Department of Business Affairs and Consumer Protection webinar. Please note any website or email that I mention will be posted in the chat box. For those seeking business licensing assistance, you can visit the Small Business Center at City Hall on the 8th floor or call 312-74-GO-BIZ. Also, business licenses can be applied for or renewed online at chicagobusinessdirect.org. If you are part of the BACP Entrepreneur Certificate Program, you can get credit for joining this webinar by sending an email to bacpoutreach@cityofchicago.org. If you want to learn about the program, please visit chicago.gov/businesseducation. Also, this webinar is being recorded and will be available at youtube.com/Chicago BACP. I will post the mentioned information in the chat box. We encourage attendees to ask questions. Please use the chat box to send your questions. There will be a Q&A session at the end of the presentation. Please note that the views, information, and opinions expressed during this webinar are solely those of the presenter and do not necessarily represent the official policy or position of the Department of Business Affairs and Consumer Protection or the City of Chicago. Today's webinar will be Everything You Need to Know About Business Insurance, presented by Sandra Cavoto, Insurance Agency. Sandra?
Good morning, everyone. Thanks for having me. This is probably my 5th year participating in the City of Chicago's educational format here. So I'm happy to offer my advice, opinions, and just really give you a better understanding after today's meeting, a better understanding of what kind of insurance you're going to need if you open a business, some things to look for when you're interviewing insurance agencies and insurance professionals, and hope that I can answer some of your questions at the end. So I'm going to start with screen sharing here, and then we'll get started. Okay. All right, so this session is called Everything You Need to Know About Business Insurance. I'm a farmer's insurance agent. A little bit about myself. I've been an agent for 26 years. I opened my business, my first office in 1997. I currently have 3 brick and mortar locations and we're licensed in several other states. Just become a professional in financial services, business, commercial insurance, as well as obviously the regular auto and home personal lines topics that people may need. So consider me a resource for things that you may need, whether you purchase from us or not. It doesn't matter as long as you know that you can get a second opinion, and I'm happy to share any information that I have with you. Okay, so I guess we'll start with the basic question. People know they open a business, they need business insurance. So what is business insurance? Any kind of insurance is a position where you want to transfer your risk. So you want to limit how much you're going to spend or take in as far as risk goes, and you want to transfer it to the insurance company. So that way you could viably stay in business should a disaster happen, like a fire or a tornado that strikes your business. So you want to make sure that you have the right policy, because this policy is your parachute. It's going to take care of things when the business suffers a loss. So really all insurance is just a risk management tool, and it allows you to transfer one risk to another. So you pay a premium, and with that premium you have insurance that protects you for X amount of dollars against certain losses. Common ones: fire, natural disaster like a tornado, theft, liability is a very big concern, liability, slips and falls, and death, even death of an employee, a key person, the owner, or like a head chef, key employee. Something like that becomes not only a tragedy in and of itself, but also just a tragedy of how does my business continue on now that I've suffered this loss. So we try to fill in that gap to make that person whole, that company whole again, and allow you to rebuild. So when do you need business insurance? So there's a couple of times that you're going to need business insurance. The first one is when you enter into a lease agreement. When you enter into a lease agreement and you're occupying somebody's space, in that lease, I guarantee you in that lease, it will tell you there's a section for insurance that you need to carry certain insurance requirements to satisfy the landlord of the person that you're renting from. The next time is think about whenever you're going to transact business with you and a consumer or you and a vendor. Anytime you transact business from one person or consumer to another, you've entered into a business transaction, whether you're an online business, you're a brick and mortar business, you're selling ice cream, whenever that transaction of trade happens, whether it's a service or a good, you need to consider having insurance. And then obviously workers' compensation, it is the law in Illinois. We'll talk about the penalties and whatnot, but anytime you have an employee, you're going to need workers' compensation. And we'll get into that a little bit further. Why do you need business insurance? Obviously, no one wants to pay for insurance and everything, especially this year. If any of you are paying for any kind of insurance, car, health, home, everything is through the roof expensive. Premiums are doubling from last year. People with good driving records are still getting huge rate increases. Re-inspections are happening. So why do you need insurance? Well, it's because we need to protect what we have. You invested into a business, you're putting blood, sweat, and tears. Lots of people are dipping into savings accounts, cashing out 401ks to open up this dream business. And you certainly don't want it to just vanish if you can avoid it. So we want to protect what you're invested. We want to try to reduce the disruption of the business. So we don't want you to suffer any more than what is already going to be happening to you. So all we're trying to do is, you need the business insurance so that way you can, again, transfer risk, reduce your uncertainties, keep your costs as fixed as possible in the insurance department. And premiums are also tax deductible. So we know that what you buy in insurance, as long as it's reasonable and customary, you can tax deduct the insurance. So in my opinion, you always want the best. Get the best insurance. You want the best doctors for your health care. And you just want to make sure that you protect yourself financially against risk, and also obviously for your health. You always want the best of that. Those are two areas that I never skimp on, because one will save my life and the other one could save me financially. So I want to make sure that those are always at the front of your mind, of never skimp on those. We talked about tax deductions. You'll spend a lot of money on business insurance, because there's a lot of areas that one business versus another business, one may need 10 policies, another one may need 3. So keeping in mind, whatever the cost is of your insurance, just a rule of thumb, you could take 30% off of that, because that's going to be the tax deduction roughly. I'm not a tax advisor and I don't claim to be one, but in my mind, I just take a quick third and I say, all right, 30% roughly. If I spend $1,000 on insurance, my net cost by the time I take my deductions, maybe around $700 or $800. So think about that when you're making those purchases, that they can be deducted. Of course, it's got to be ordinary and reasonable and necessary for your business in the trade that you do business in. And this is obviously, you want any other further questions on tax, you want to talk to your tax accountant. So most people think of insurance and they hear liability, like they'll call us in the office, like, I'm opening a business, I need liability insurance. Great, that's obviously like the first part of a business policy, but all these things that are listed on the screen, auto, life, key person, general liability, professional, all these things that are listed on this page are all things to consider. And sometimes people don't realize when they check the box that they bought a liability policy, and that would be this one, this general liability, it may not cover you for all of the other items or areas that you might be at risk for. So just be careful. Again, I feel like when you're looking for insurance for a business, different from buying car insurance, but when you're looking for a partner to buy a business policy from, you want to be interviewing several different insurance agencies that are going to fit your needs. Make sure that they consult with you, give you advice, offer you the suggestions that you may need, because I don't expect somebody that's opening a flower shop to be an insurance expert, or somebody that's a roofer to be an insurance expert. So you want to rely on professionals that you're paying money to have representation, and so that's really, really important for your insurance advisor to be a true professional that you could trust. and make sure they go over all of these. I'm not saying everybody needs every one of these things, but know that it's more than just liability when you're talking about business insurance. We're going to touch upon most of these coverages and benefits during this course here. So this is a super important slide because a lot of people will drive their personal vehicle, their personal auto, and run business errands. And there is a difference in your personal auto policy, and there's exclusions on your personal auto policy as to when a personal auto policy is not going to cover something that you do in a business setting. So keep that in mind, and you may need to make that phone call to your auto provider and tell them what you're doing for your business. Like, for example, if you are delivering pizzas or you're a courier service and you're doing some things like that, your personal auto policy has an exclusion for certain types of deliveries. If you're doing Uber Eats or Uber, you need different type of insurance for that coverage. You may be able to still keep your personal auto policy, but you might need to add a coverage that extends to your business. So conversation to be had. But the minute you have employees driving your own car, puts you in a different category that needs to be in a business auto policy. So it's a commercial policy versus your personal auto policy. Even if you don't have an LLC or a corporation and you operate as yourself individually, if you change that, the type of risk, like you're letting an employee drive your personal car and you're not incorporated, you'll still need to buy a different type of policy to get coverage the right way, to have you protected the right way. So this is, if you're making notes on this is a really big one because most of us use our car for some type of business. Even if I'm running to the bank to make a deposit for my business, that's technically a business transaction and I'm using my car for that business use. So there's a way to make sure you get that coverage protected, but you'd have to tell your insurance person that that's what's going on. You don't want to wait for a claim to get denied to find out that you didn't call for the right coverage. This other hired and non-owned auto coverage, it's a very important coverage that is oftentimes I see in a lease, but it's not available on a personal auto policy. So when you see this hired and non-owned auto, what that means is if you let your employee drive their own car and they run an errand for you, so you don't own their car, you basically hired them out to use their own car and, go get, if you're in a restaurant, we ran out of lettuce and tomatoes, go to the store, buy them and come back. That business transaction is your responsibility if that employee got in a car accident. So this coverage, hired and non-owned auto, would provide and extend coverage to the business if that example that I just gave you, if that situation happened in whatever environment that you told your employee to go run an errand for you, that 20 minutes that they were gone are your responsibility of that vehicle. So without that coverage, the business is sued and there's no coverage that would extend. So your liability policy that you have doesn't provide that auto section. So keep that in mind. That's another important note if you have anybody that's just helping you with your day-to-day operations, even if it's a very rare occasion. But on that rare occasion, if something happens, it doesn't take, it only takes one time to have that accident happen and not be covered. So it's really an important coverage to have. Another example that I'm going to tell you about this, what happened with a client of ours on, it was a Century 21 office. They hired a receptionist to run the front house, so not using their car for business, but the real estate agent was running late, asked the receptionist to take his car and drop the open house signs off at the house, however the distance was, a couple of miles away. So in his car, he took the signs, and then he got hit by an oncoming train that happened. And so it was a really bad accident. But that hired and non-owned coverage, not only was the employee sued for whatever happened on those injuries, but Century 21 was also sued for that time period that he was driving his own car for business use. So it doesn't take much. So, and it's not an expensive cost to have that coverage on your policy. Key life insurance is what you may hear the term called, but it's really a business life policy. And I like these kind of policies because it adds instant collateral for the business owner. So if you were to have a $250,000 business life policy and you went to go try to get a loan for, let's say, $100,000, the obviously you have to qualify for your loan, and we're not loan officers, but obviously you have to meet certain criteria to get a business loan or an SBA loan. But after that, having a lot of the requirements that banks have is you need to have a business life policy. So if the key business owner passes away, they know that loan is going to get satisfied because it's collateral. So the bank gets paid from the life insurance and they're made whole. So it can be part of a means to get you approved for a business loan. And then when that loan is paid off, you still have collateral for another loan or for expansion, or perhaps just a spouse that may take over the business should something happen to you. So we use it in our office obviously for the key person, me as a head agent, and then my key employees that I have, that it would take maybe 2 or 3 years to hire and train new people. Where am I going to get that funding to replace those employees? So that key employee coverage is very useful as a retention tool for keeping good employees, and also to protect me as the business owner, to make sure that my business, should I suffer this type of a loss, that I have funds to come in to reposition and make my business not suffer any further than what it already has. You can also use key life insurance to give executive bonuses. We do them for like executive chefs or partnerships, and maybe they're not a partner of the business, but they're your number 2 right hand. And you can use this as a tax incentive to create legacy for the business owner as well as the key employee. It also provides an instant cash to your heirs. So you might have a $300,000, $400,000 business debt, and something happens to you, and now you married, maybe you have 2 or 3 kids, and now that spouse took over that debt. And so having key life insurance takes care of, maybe the spouse may want to just sell the business, or maybe they want to keep it running, and it provides instant cash. So it's a great way to add that as a foundational piece when you're looking at what type of business insurance to buy. There's also stockholder life insurance. You can use this through a buy-sell agreement if you have multiple partners. This is a little more complicated, but just know that when you think about business insurance, do you have a partner? Do you have a key person? Do you have debt that you're taking on? Do I want to maybe expand my business in the future? A business life policy would be a great foundational piece to, if you're eligible for it. Obviously, there's medical questions that you have to qualify for. Not everybody can get it, but if you can, and the younger you are, the less expensive it is, I recommend keeping that on the books as a little parachute there. So here's your general liability. What is general liability? So these are the common reasons why general liability is the foundational piece. The first piece you need to even get your keys from a lease is that slip and fall. If the customer gets injured while they're on your site, there's medical bills, there's emergency room, there's pain and suffering. That customer is entitled to money. Where are you going to get the money from? It's a liability claim. Most general liability policies, although there are some that still have a deductible, most do not have a deductible. Our farmers products do not have a deductible. The companies that we write, that when farmers can't write something, and I am a broker, I see some deductibles, $500 to $1,000 deductible on certain liability claims, but most of our carriers do not charge a deductible for an injury. So it covers their personal injury, their expenses, their medical expenses, advertising injury. So if you post something and you print something in paper and it defames somebody, you could get sued for that. Product liability versus premises liability. So let's say you are a soap manufacturer and you didn't put a disclaimer of some kind of ingredient that was on there, and then somebody gets an allergic reaction, and then they have a rash or third-degree burns come on their face. That would be a claim under product liability, versus a slip and fall at the restaurant is a premise liability case. So you do want to make sure, if you are selling products, that whether you label them yourself or or you're manufacturing it yourself, or you're just stocking it as a grocery store type of thing, that you carry product liability, because the product that you sell, even if it's not labeled with your own label, could come back to you as you touched this product, you sold the product on the shelf, on your shelf. You may be brought into a lawsuit if somebody got sick or hurt from that product. I'm going to give you an example of that, because these examples, from what people tell me, they seem to stick from, like, if this is pertaining to you. I had a auto body parts shop, so an auto shop, and they just sold parts. So I had a client that sold a battery to a client, and it was just, he took it off the shelf and he sold them the batteries. Custom packaging was, from the manufacturer. And then, a couple of days later, the car blows up into flames. And then we got the lawsuit, farmers got the lawsuit from our client. And then over that time, he was removed from the lawsuit, but we still had about $10,000 of legal bills that we paid for him to represent him, so that we can get him off of the lawsuit. So it may not be that we're gonna pay a claim as far as injuries, or we may not find him guilty, but there's still expenses that need to be represented, unless you're going to self-insure. And we all know that lawyers can be very expensive at $300 to $500 an hour. So you want to make sure that, again, if that's your situation, that you make sure that that's a box that you want to check, not just premises liability, or under that general liability, that product liability is included in that, or you have to pay, may have to pay extra for it. You also want to read your lease requirements. And I've also helped a lot of people negotiate their lease. A lot of times the lease is just a standard lease, and they'll say, we want $5 million of this and $5 million umbrella. And it may sound like it's a lot of coverage, but you work with your lawyer, you may be able to negotiate a lesser amount. More coverage is always better, obviously. So if you can afford more coverage, we want you to have more coverage. But I'm also cognizant of a new business. We're so strict with where do we spend our money to make sure that we're not making any foolish purchase decisions. So sometimes insurance, we just have to think about it and spend what we need to cover the basics, but know that I understand that we're tight on money moving into a new business. So you may be able to negotiate that down, but there's certain things you're obviously not going to be able to negotiate. But I have seen some leases that have like 10 million liability requirements, and then we're able to negotiate it down to like 3 million. And then insurance is reviewed every year. So as your business grows and you get more customers and you have more revenue coming in, it makes sense then, financial sense, to maybe up coverages as you see that need increase for you. Additional insured. This is a common request. So who would want to be an additional insured? So anytime you enter into a contract with a third party, another vendor, they're going to want to make sure that if they do business with you, that you have insurance. And so they'll request from you. They'll say, we'll let you lease our equipment, but we want to make sure that if I lease you my equipment, that if there's a claim, we're also protected. So the person that's doing the leasing, their name is going to be listed as an additional insured. And so that means that they get notices if you don't pay your bill. They get everything that the customer gets, the primary named insured. And then if a claim happens, we also will defend that name of the additional insured. So that's the whole point of it. Like when the Taste of Chicago goes on, the city of Chicago is on every single additional insured endorsement from every vendor that's on that, in that whole venue. The city of Chicago is listed. That's to protect them, that if somebody gets sick on the food or something happens and the city is sued, they need to rely on everybody else's insurance to protect the city. So it's very common. Contractors are the most common. We get additional insurance for any job you'll do, whether the village of Lyons or the customer, the homeowner wants to know that you're protected. A roofing contractor, their supplier, anybody involved in your business that would make sense that they would be an additional insured, will request you to call your agent and request that. Most of the time, they're complimentary. We'll add them for no cost. Some companies charge $100 to $200 per additional insured. If you're the type of business that you're going to be doing a lot of additional insureds, like you're a contractor and you're doing this all the time, there you can purchase, like, if the company charges, you could purchase a blanket additional insured rider, and maybe for $500 you can have as many additional insureds as you want. So if that company charges, then I would go blanket on your on the product that you need. If they don't charge, then it doesn't matter, right? If they don't charge for additional insureds, like Farmers isn't charge, then there's no reason to pay extra money for something we give you for at no cost. So it's common on commercial insurance. It protects the other entity from one other person's negligence. So you just want to make sure that number one, know that it's common. And number two, if you're the vendor and it's reversed, make sure you're requesting that same additional insured endorsement. So if you're supplying something to another vendor and you want to make sure you're protected, you are entitled to that same request. So when you're the homeowner or when you're the person hiring somebody else out, make sure you ask to see the copy of their policy and list you as an additional insured. Then you know you're protected. Professional liability. So different from general, the professional liability is called errors and omissions, is another term for it. E&O is the acronym that we use for it. But if you're giving professional advice, not physical advice, but you're giving professional advice, like an accountant, an insurance agent, a lawyer, these are professional services. And if that person makes a mistake and gives you wrong advice or doesn't protect you, there could be some ramifications that you can collect your loss. You can get protection from that other, the person that gave you the advice or service under their professional liability. Also doctors would be a common one. Theirs is called malpractice, but it's all in the professional liability category. So if a doctor makes a mistake, takes out the wrong part or whatever happens, that's how people get paid from their lawsuits under certain coverages. So it would fall under professional liability. So it's just failure to perform. In the insurance world, if I forgot to add a car, you called and you added a car and I said, no problem, I'll got you covered. You drive off the lot and you get in an accident and I forgot to put it on. You're not responsible for that. I'm responsible for that. And then my insurance under my professional liability protects that error that I made, and it protects to make the customer whole. So everybody should always be protected in those situations. If you don't have the right coverage, then you're open at risk to being sued personally. And then those things can get very expensive, as we all know. Crime insurance is an employee situation where it's an employer to employee. It's also called fidelity. So crime insurance pays if your employee was dishonest and they took money from your cash register. There was a theft and the employee was responsible. You'd obviously need to provide proof of that. A lot of us have video cameras now all over as well, inside and outside. So it's not that difficult now to find the person at fault. But that's what that benefit is to make the employer whole if the employee does something to the employer. So that coverage is called crime. It's also called fidelity. Sometimes you can get it as a bond option and get a bond for your fidelity coverage, but think of it as an employer to employee coverage. And some policies come with it and other policies you have to add it. So these are why we're talking about it, because if your policy that you're getting presented, the quote that you're getting presented doesn't have all these things, then that means it's an a la carte type of policy and you have to add coverages that you feel that you may need that may be pertinent to your business. Again, all of these little coverages that we're talking about, nothing is that expensive that it would make insurance totally unaffordable. It's just, $100 here, $100 there, $200 here. That stuff is what adds up, because one specific coverage may be $100, but if you bought all 10 of them, well, now you're at another $1,000. Now you have to look at which ones are the most and rank the most important. If you budgeted properly when you're doing your business plan, you budgeted properly for insurance, you should be fine with what if you budgeted correctly, then all of these coverages that we're talking about should be already built into the cost. We're not adding additional costs onto your bill. But if it's really tight, then you might have to consider which 100 you want to take off, if every dollar obviously counts and matters. Cyber liability, got really popular in the last probably 10 years. We didn't have it on our policies before. Now it's available as an option, but it covers that data software that you might be a victim of from you putting your credit card down, and now that credit card got hacked because you went to the restaurant and the restaurant's server got hacked, and all that data that goes along with it. If you provide a social security number to some, like maybe to the hospital, and then that gets hacked, that's what cyber liability protects us from. So if we are victims of that, we can get protection as the business owner to make other people whole again. We may have to buy that LifeLock, or we may have to take care of their software, things like that, to make that network back up and safe, stops viruses from spreading and things like that. So cyber coverage is really important. It's gotten very, very important over the last few years, but 1 in 4 is still the statistic that people are victims of identity theft and identity type of crimes. So cyber is a big deal. So make sure you have some coverage on that on your policy. And it covers the legal fees as well for the business owner. So we pay for the legal fees getting and the costs of getting the victims, making them whole. Property insurance, kind of like your homeowners or renters insurance, it protects your stuff, your business, personal property. If it was on fire, vandalized, let's say all your contents in the restaurant that you own, all of those things that you bought to make that business a business is called contents. If you're buying equipment that's like permanently installed, like a Ansel system or refrigeration system that's you're building it into your business, that may fall under a different category because it's permanently installed into the building. It might be called building insurance or improvements and betterments. But for the most part, things that you bring into your business that you're going to take out, including inventory, like if you're selling, if you're at a grocery store, all that product that you're selling is your inventory, and a fire happened, that's the coverage you want that will pay out for all of those things that are inside your space. So, and we want you to calculate that number on replacement cost. So not what you paid for it, what it would cost new for an insurance company to replace it. You might have gotten a deal, somebody went out of business and you bought everything at half off, but if I had to replace that today, I might not find that same deal. So you want to go with what it costs today to replace your items when you calculate how much coverage I should have for that in that category. That is a factor in how we calculate cost. So if I want $25,000 of contents coverage versus $50,000 of contents coverage, it's obviously more expensive to buy $50,000, but we want to make sure you're covered at today's costs, not what you paid for or depreciated costs. Otherwise, you're going to be short on coverage if you don't have the right amount. So when you're looking at flood, remember that's another option to add. If you're in a flood zone, or if you're in an area where all your things are below grade, in the basement, you may want to add water backup coverage or flood coverage, because if you don't, that might be an exclusion on your policy saying we cover fire, theft, and vandalism, but if you have a flood, you need flood insurance, that's not covered. So again, conversation with your rep as far as what's important to you and where you have the most risk, but you can add these coverages onto the policy. Like water backup is common. They have them. Water backup is also listed as an item on your homeowner's insurance where you can add coverage. Most of us in the city have basements, so these basements tend to back up when the sewers, heavy rains, and the sewers can't handle all the excessive rain, and then when it backs up, we get mold and all sorts of problems in the basement. So that's an option to add on a business policy. One thing to think about when you're looking at property coverage, if your place is vandalized, you probably can't open the business for that day. You probably need to buy new inventory. You probably may need to relocate. So things like that, when that happens, business interruption is covered because when that claim triggers, and you have the right policy, you would have business interruption, which will cover the income for the days that you were not open. So if your business takes in $5,000 a day and you were closed for a week, we're going to pay that benefit. We're going to pay your $35,000 of business interruption. So you make sure you have that coverage on there. Again, those are important. Sometimes they're covered as in our package, and sometimes you have to a la carte them. So when you're reading your coverages, make sure, if that's an important coverage for you, make sure that you have it. Workers' comp. We talked about it early in the first slide that it is required by law. There are huge penalties for not carrying workers' comp, but there's also some exemptions when you own a business, but you don't need workers' comp. But what it covers, you're responsible for anything that employee does. Burns himself on the coffee pot, gets cut with scissors that they're cutting something, lifts a heavy box, any kind of injury that the employee suffers, regardless of who's at fault. I had a client that it was a restaurant, and he was washing the dishes, and he decided to play with the glasses, play like the game with the balls, but he was doing it with glasses, shatters the glasses in his hands, has all sorts of cuts in his hand, goes to the emergency room, stitches all over the place, can't work because both his hands are out, and there's no stupidity exclusion. So we paid for all that injury, even though nowhere in his job description did they say you could juggle glass, and we're okay with that. So that's why I say, regardless of who's at fault, we have to have that coverage. So we pay their medical bills and lost wages. And it also can cover third-party lawsuits. So for example, on the third party, let's say your spouse, his job is to take asbestos out of buildings. So he comes home, takes off his gear that's covered with asbestos, and then the spouse washes the gear, and now the spouse gets asbestos in his or her chest and his lungs, and now there's a claim. Well, the spouse is not the employee, but because the employees brought that home, that became a third-party situation, and we're responsible for that by law. So it's crazy, even when they're not the employee, the employer seems to be always holding the bag with the responsibility, whether it's the commercial auto, the third-party workers' comp. If somebody doesn't wash the floor the right way, if somebody's juggling glass, it seems like we're always the responsible ones to have to pay, even though sometimes not our fault, not our negligence. So just know that you're the responsible party. The business owner is always the one that carries the weight of the responsibility. So having the right insurance, going back to that, just like the right doctor, it can really save you. And so be very cautious and conscious when you're making that purchasing decision, because it does make a difference. It's not just price, and price being always sensitive to price, but the right coverage can truly protect a lot of things. And interestingly enough, on workers' comp, let's say you didn't have that workers' comp policy and there was a claim, you cannot file bankruptcy. Your business cannot protect you from filing a bankruptcy and not being responsible. Our Illinois law says that if the business owner failed to carry workers' comp and they were negligent, where we have to pay the claim, that if there's a bankruptcy and the business shuts down, that business owner is personally liable for those injuries, the bills of the injured employee. So it will never go away for you. So if you have to think about, do I need coverage? If you're not an exempt employer, meaning you don't have any employees, you're the only worker, even if you hire 1099 people, you still have to carry workers' comp if they don't have their own. So it's just a really, really tough one. And I think I think it was up to $500 a day fine if the workers' comp department fines you for not carrying workers' comp. And they can go all the way back to when you opened up your business, which is like, let's say if you were 2 years without workers' comp and you should have had it, it's like, could be like a $250,000 fine. So it's just so ridiculous that you don't want to not be without it if you are one of those employers that need it. This is a good website I would refer you to if you want more information on this. So you're not sure if you're exempt, you're not sure if you should have it. you have questions about it, there's a whole department. And then this is the, I thought I had a, once you go on the website, it'll give you a phone number. They're downtown, and one in Springfield that you can call and ask questions about, specifically about it. But really important to learn and read about it. It's also, the law is downloaded on this, in this app, in this website. It'll give you the entire booklet of how much the fine is, what you're responsible for, who's considered an employee, so on and so forth. EPLI stands for Employment Practices Liability Insurance. So this is an important coverage too. Like everything, it seems like everything's important because they're so important. When I see all the claims coming in, they're so important because things like this happen, unfortunately. But wrongful termination, sexual harassment, discrimination, what if that happens to you and you're accused? What if your employee was accused of harassing another employee? You're responsible for that. If it happens in your business facility, you're responsible. So it's so scary to not have these coverages if you're involved with employees that you may or may not intentionally tell a joke that somebody found offensive, and next thing you know, you're slapped with a lawsuit. Even if it's a frivolous lawsuit, again, somebody's got to defend you. Even so, it's $5,000 just to, close the book and tell them to go away, that it's ridiculous or whatever. But things happen in the work environment, and it seems to be more and more common these days with harassment, because people are coming forward now more, and they're not allowing discrimination and just wrongful acts in the office to be to go on. So it's become more and more prevalent to why we need it. Right now, more than 40% of our claims are with small businesses. So it's everywhere, and my concern would be if you have multiple employees. I know that I'm not going to say anything or do anything, but what if somebody else says or does something? How do I know that I can be 100% sure that they're going to have my back, and just to be professional? So you don't know with 100% certainty what's going to happen. So you buy insurance to reduce the risk and pass that risk to the insurance company and hope that everybody makes the right decision. Like, I hope I never have to wonder about my coverage and use it. I'd certainly rather pay the coverage than have the claim, but I don't want to worry that I don't have the right coverage when something does happen. And we've had so many EPLI claims. You can fire anybody at will in Illinois, but it doesn't mean it was the state of Illinois may not think that it was not discrimination, right? So you have to make sure that you're doing things the right way. And there are departments that you can call as the small business owner and find out, I want to terminate this employee. What are my rights? What are the employee's rights? Did I go through the checklist? There's, who's going to help us when we're opening a business? There are resources to use, not coming off tangent on insurance, but from one business owner to another, there are resources that we can rely on, so that way you don't make these, unnecessary mistakes if you can avoid them. But again, you can protect yourself so much, but what about another employee can be harmful to a coworker, and then you just don't have that kind of guarantee. And EPLI claims are very expensive to defend. So another important coverage. Commercial umbrella, just like a personal umbrella, it's a layer of additional protection. They are sold in $1 million increments, but it's another layer of protection where you might need it. So like when we had that nightclub, all the stampede, and there was something going on with the nightclub, and there was 5 or 25 fatalities. I don't remember, it was many years ago, but that $1 million umbrella policy that they had isn't enough to maybe pay out those lawsuits that happened. So maybe that company needs $20 million umbrella, but depending on your business, it's sold in $1 million increments. It's just another layer of protection. So wherever it needs it, whether it's the commercial auto needs it, and there's a claim that happens, or under product liability and a claim happens, wherever the business has suffered and the underlying limit, the policy that you originally bought, is exhausted, meaning all the money has been used up. We've spent the defense, we've done all this. There's no more money in this bucket. But if you have an umbrella policy, we'll add additional funds to defend you. So we'll pay for that fee, the legal fees, or to settle a claim, we may have to open up that umbrella. I do see very commonly umbrella being on leases, at least $1 million. So it's very common when you enter into a lease. Completely recommended to have it, because you just don't know, especially when you're a new business, or if you're just new into the industry of the business. Sometimes we're our worst enemy. We make mistakes because we're still learning too. So better to have insurance if we do make a mistake that may hurt somebody while we're learning and growing our business. It's just always a good idea to have an umbrella policy. Not expensive. Commercial umbrella without liquor liability and all those, just a standard commercial umbrella runs about $500 per million per year. So again, every little coverage is not expensive. It's when you add it all up. I went from maybe $2,000 of insurance, now I'm at $5,000. You need to make business decisions as to prioritizing where your needs are and most important. The surety bond. Surety bonds are most common for contractors, but it makes the person that's hiring you to fulfill the contract make sure that you don't skip town with their money and the job didn't get done. Not expensive, common on contractors. So if I hired you to do my roof or my concrete on my patio or whatever, you're going to want a down payment, and you're going to probably want 50% of the contract. It's common. So on a $10,000 bill, I have to give you $5,000, and I don't know if you're going to be back tomorrow. So that bond guarantees that if that contractor fails to complete his obligation, I can call on the bond to make the customer whole. So you have to apply for the bond. They're not expensive. They're smaller type of bonds. A couple $100 is what a bond costs, but that gives that insurance that will fulfill the contract if something happens. It doesn't cover faulty workmanship. Like if they did the job, but they didn't do a good job, you can't call in the bond. This is if the bond doesn't get fulfilled. If they did faulty workmanship, that's another type of problem that you'll have that they may or may not have coverage for. But this is specifically for fulfilling the contract, not about the quality of the work that was done. Loss control. Loss control is not a coverage. It's an added benefit that the insurance companies will hire. And sometimes it may sound like it's a little bit of a pain because they're coming into you're coming into your business. They're going to ask you questions. They're going to provide you things to make your business safe. If they see areas where there's a concern, like your railing is loose or a railing is missing, or you don't have slip resistant pads in the kitchen area where people are working, they will write up a recommendation to the insurance company and require you to comply with that. So part of the deal is we'll give you this insurance, but if we request loss control, you have to let them in, you have to be agreeable, you have to agree with the recommendations. And this is all to keep a safe work environment. Mostly good things. We're not asking you to do things that are out of line, but sometimes they can get costly. Like if you're not up to code on certain things, we'll come in and help get you in the right space. So that way we both as a partnership, the insurance company and the business owner are in partnership together to keep not only a safe work environment, but also profit. The longer you stay without claims, hopefully the better your premiums look. Obviously keeping up with inflation, you might get a discount for not having claims for 3 years, but then your premium still went up. It could have gone up a little bit higher, but because of inflation and the discounts, maybe you're still just like flat or a little higher than what you were before. So the goal is to obviously number one, keep it a safe work environment. But number two, we want to keep your premiums as little as possible. Every claim that gets suffered by an employer, you're still paying the price. Even though we're paying the bulk of the bill, you're going to pay some of it with a rate increase. We may exclude drivers if they're, poor drivers. There's some things that are going to happen, but the business owner always is the one that's going to suffer, whether through a rate increase or not. So, and we also don't want anybody getting hurt while on our watch, of course. The loss control will help with employee handbooks. They can provide videos on slip and falls. They can give you continuing education. It's really a good thing that happens, but I do understand that it's another thing that's on the list that we want to get in and look at your business and we're looking for things too. We're not just looking to make friends. We're looking for areas that we see could be a problem or concern for the business and the insurance company to be on. We're on a lot of risk. So think about how much money we're insuring you, millions of dollars of coverage for just thousands of dollars of cost. We're giving you millions of dollars of protection. So we want to make sure that we're giving the best price, but also we want that risk to be in the best shape to be profitable for everybody. So it's a very good thing that it happens. If it happens, you just have to comply. It doesn't cost anything. We pay for the loss control, but customer has to comply. If you fail to comply, your insurance can get canceled. So kind of don't have a choice with it. So when you sign you're signing the application, one of those statements says, I agree to have loss control. So know that that's normal. A liquor license. You'll need liquor license if you're distributing liquor in your business or establishment. If you're a bartender, things like that, if you're serving alcohol, you'll want to have liquor liability. Liquor liability is also known as dram shop, not drama shop. That's a typo. Dram shop coverage is another name for it. The city of Chicago, the state of Illinois, if you're serving liquor, they need to be an additional insured on your liquor liability policy. But this host liquor liability, the first item is if I'm hosting a holiday party and I want to have liquor at my holiday party, but I'm an insurance agent. I'm not a business of selling liquor. But what if somebody gets hurt in a car accident after they left my party? What happens there? Well, you can have coverage that extends in that situation. Some companies give it complimentary. Some people, you have to buy it extra. But if you're in that situation and you're having a party, always call your insurance advisor and make sure, am I covered for this? So that way they can tell you if you have to buy something or it's covered. But that gives you this liability protection just on that rare occasion. I'm not charging a fee for the liquor. I just want that extra protection. If I have a party and somebody gets a little out of hand, that the business owner is protected should something happen after a few too many drinks are served at the holiday party. Not that ever happens. So liquor liability, you'll know if you need it, but if you have a party and you're not in the liquor business, call your insurance professional, because you do want to make sure if you have to pay for it, it's worth paying for it, or don't have liquor, because liquor and after hours is not a good mix. Human resources. When you're the business owner, whether you're one person, 5 people, 25 people, you're also the HR department and you're the benefits department. The state of Illinois passed a law that if you have 5 or more employees, you have to provide a 401k plan, a retirement plan. It could be a simple IRA, it could be, but you have to offer a retirement plan. The deadline is November 1st. If you have more than 5, it's going to change to, I think in 2 or 3 years, it's going to go to 1 employee. So everybody's going to need to have a retirement plan set up. We could set those up. They're very inexpensive to set up. But if you have 5 or more, you're going to be required to offer it and establish it. So if you need help with that, we can help you with that. But health insurance, there's group health, there's individual health, disability insurance. Again, you're the owner. So if you don't have it, you didn't buy it, it's not given to you because now you're the person that's in charge. So things that you want to think about that may have been on your W-2 job, these are the things that you forego when you leave that W-2 job and you become a business owner. Or maybe this is your side business and you have these other coverages, you may want to supplement them with something else. So you may not have enough coverage of one area or the other. But health insurance and disability and life are the big ones. We also do long-term care and vision, and obviously that retirement now became a law that changed this year. So if you have 5 or more employees, you definitely want to make sure you're not going to get fines. If you don't sign up for your own plan, I believe a plan is provided for you, and it's really not a good plan at all. Their state of Illinois plan is not good at all. So you're going to pay one way or the other on that one. At least have your own choice. And now I think we're going to open it up to questions. One thing I just want to, before we go to the questions, obviously we're a very busy office. I will not be contacting anybody. So even though names are put in a roster, we don't call anybody. If you need my help, I'm here to help you. If you would like to set up a private meeting, that very specific to your business. The questions might be too specific for this venue or this type of situation we're in. So I would encourage you to send me an email or call and make an appointment, so that way I can give you some private attention and a little more exclusive. So with that, I'm going to open it up to questions. Let's stop sharing and see if I can see what's in the chat.
Great, thanks, Sandra. I did see one in the Q&A.
Okay.
What if you make cakes with alcohol in them?
If you make cakes with alcohol in them, you're not serving the alcohol. And I'm assuming that the cakes are not like, just alcohol cakes where people can get drunk on. I put anisette in my coffee cake. That's okay. That's not going to, you're not going to need dram shop coverage for that. If that's part of your ingredient, it's more if you're serving alcohol in a cup, not if it's infused with alcohol.
Great. If anyone has any questions, if they could please put them in the chat.
The quiet group. Usually we have a lot of questions.
I know, but the content was really well covered. So sometimes
yeah.
I think they're still processing too.
Yeah, still processing. So yeah, give you guys a minute to think about the coverages if you want me to go into a deeper dive in that.
What about nonprofit coverage?
Nonprofit, yes. Nonprofit is a product that you need. It's still under the general liability though. So it's coded though as a nonprofit. Inside that nonprofit is directors and officers liability that you'll need. So it's another little layer underneath that liability protection. A nonprofit needs protection for the officers of the business. Yes, so that is a separate benefit, separate coverage. Once you say you're a nonprofit, it's automatic that we ask you how many officers are in the business and how many people are, what your type of work you're doing, whether you're counseling or doing volunteering at a YMCA. There's a coverage for nonprofits. Yes.
Getting a few questions about where the video or recording will be posted. It's youtube.com/Chicago BACP. And I also put that in the chat. I
know there's so much to take in. It's like hard to condense it all in an hour, but
it definitely.
Yeah.
There is a question. Can you speak a little bit more about the EPLI covers, wage theft, accidental, etc.?
Wage theft. Okay, so the wage theft. Okay, that's the crime. Okay, so I'm just going to repeat it then, and just to keep it simple. So EPLI is employment practices liability. So an employer can hire, fire anybody they want. They can, but what if you wrongfully terminated somebody? What if there was discrimination involved? What if you said something inappropriate to your assistant? Those kind of things. And there's a process that people file when they file complaints against their employer, or it could be another employee. Remember, they can file a complaint. There's a department that handles that at the state of Illinois level, the Department of Labor, and they file a complaint against you. And then there's a hearing, and then the hearing can take you to what are you responsible or not, depending on how bad it is. I mean, people I think have gotten a little more conscious about, maybe I shouldn't say that bad joke, or maybe I shouldn't be offensive to somebody's race, or things like that. It's gotten a little better. I feel like the last few years, but there are still innocent situations where somebody took offense to it. And if they see an attorney and the attorney feels that there's a case and there's documented and there's maybe an email or something that happened and you're accused of this, then under that coverage, it's a liability coverage. That means we're paying for the cost to defend you. And then we're paying the cost to pay the pain and suffering if you were negligent. But what if you weren't negligent and it's still, it's going to go to court and you're going to have an attorney to represent you? That EPLI coverage pays for your legal fees and attorney fees and court costs in your defense. And then if you're found guilty, then there's pain and suffering that goes along with that. All of that EPLI coverage is typically bought. If you have $1 million general liability and you bought EPLI, you can buy coverage from $50,000 benefit to $1 million benefit. The higher the risk of your business, the more expensive EPLI can get. So if you're in a restaurant industry, you may pay more premium because that's a high category of discrimination and things happen higher at a higher rate in a restaurant environment than in a law firm, right? That may just give you an example. So cost is way different. It can get expensive. So on some of my restaurants that may have, average of 16 to 20 employees, and they have $1 million policy, it may cost $1,000 a year to add that coverage to the policy. So it's not $100, it could be $1,000 to add that benefit. But so that's kind of just repeating what that is. Happy to discuss a little bit further if there's a case you're wondering. Wage theft is not accidental though. No, this is wage theft. That crime coverage is somebody physically stealing from you. Not I lost, I didn't make the right change for the customer and I lost $20. No, this is somebody truly took your deposit and pocketed it, or they were creating, they stole from you physically, not an accident. So that's that.
Okay, great. Another question just came in. If an insurer only partially covers everything, can you do a second insurer to get those few items you need, like cyber, auto, or crime? And then what about childcare as a secondary operation? I was told I would need a second business entity just for childcare to separate it from my other business operations.
Yes. Okay. So I'll still we'll dissect that. There's a few questions in there. So can you get separate policies? Absolutely. So if one company doesn't provide all those other benefits, I can go to a market and find just cyber coverage, or go to a market and just get EPLI. If your type of industry allows it, we can do it. We can find you a policy. So you can it's always cheaper to bundle it in the same company. If you bundle it, we call it a business owner policy, and all those coverages that I talked about are kind of built into this package. And then it's much cheaper to buy the package than buying it individually. But the short answer is yes, you can buy them separately if they don't offer it. Childcare is a second operation. If you are running, let's say you're running a flower shop, and then you also have a daycare, two totally separate types of businesses, you would need two different policies for sure. But if we can create one policy with one entity because they're similar businesses, then there's a possibility I can do one policy. But typically, even for liability purposes, if you're running two different businesses, you said a second business, and you have a second business entity that does childcare, it's so unique in that category that unless you're doing maybe you're doing child drop-off services, and then you have a daycare where you're doing kind of Uber you're going like bus service for kids, then it's in the same category, then maybe we could make that into one. But otherwise, that sounds absolutely true. Whoever told you that, you should have a second entity. It keeps your liability limits separated. Your childcare is an expensive, it's risky because you're dealing with kids, and there's molestation coverage, and then you're handling children. So there's, harassment and things like that. So there's different coverages. So if it doesn't relate, you would need a separate entity and a separate business to cover both of those different types of business operations.
Okay, great. Just to clarify, someone put, so EPLI is specifically for discrimination and or wrongful termination, not other employment issues, correct?
It does include other employment issues, but it's specifically for practices that are those specific, like, so wrongful termination, discrimination, harassment would be part of that. I don't know about employment issues, like, I don't know if you have an example of like, would that be covered or not, but EPLI does cover a few other areas. Those are the common ones. So when you say employment issues, it's possible there might be other, not being very specific on that. It could cover other employment issues, but let's say you didn't give somebody a raise. That may not be an EPLI situation, but let's say you gave another person a raise and this one didn't get a raise, and the person saying because they were Hispanic and they didn't get a raise, and this one was white and got a raise. It could be, so it's possible that it would fall under that. But those are the categories it's meant for.
They did reply, failure to pay correct overtime.
Unless failure to pay correct overtime is not part of an EPLI lawsuit. No, that would be more in the payroll department, which is if you didn't pay that may not be part of that. I'd have to verify though that could. If you failed it intentionally, it's possible. If it was an error, it may not cover it for that situation. I would email me offline on that, and I'll have to read the endorsement protection on that. And it depends on if your accountant that did it for you, maybe the one that's under their professional liability would be covered. That's where I'm thinking of, is your accounting firm may be responsible for that area, not so much you under EPLI. But if there was malice involved, that might be possibly, if that's the case, then it's possible.
Great, thanks.
yeah.
Another question, you said, and soon we will have to be required to offer health insurance. Can you talk more about that if we are one person company?
Yeah, so health insurance, so if you're an individual right now, no laws on buying your own insurance. If it's just an individual, no. But the law that changed was for retirement benefits. You have to offer, if you have more than 5 or more employees, in Illinois, you have to offer a retirement plan in Illinois, or one will be provided for you. So it's not health insurance, but if you have, right now, health insurance is not required under 25 employees. So you're okay there. You don't have to have a group health plan involved. And if you're a one-man shop, you don't need to carry any of that. You just have to fill out a form with your accountant exempting you from the retirement if it's just you. So you don't have any employees, and I think you just have to add a form to your tax return that exempts you from that. So same thing with one person entity. If you're the only person in the entity, you're exempt from workers' comp. You would be exempt from needing group health insurance, and you'd be exempt from offering the retirement plan. Down the road, I heard that in 3 years that requirement that was 5 employees to have the retirement is now going to be 1 employee, but that's not here today. So nothing for anybody to worry about today. They could change the law and make it 5 years from now. But from now, from what I heard in today's times, I've heard that that's going to happen not for 3 more years.
Great, thank you. Lots of thank yous coming in. How can you tell when you are being overcharged for liability insurance for basic coverage for consultancy, business, and nutrition?
How can you tell? Well, the easiest way is get 3 bids. Get a couple of bids. Sometimes, again, a policy may have more coverage that's built in than a basic plan, but I would say a common price, if you're in the $1,000 or less range for what you just said you do, that's probably a good standard price. If you're spending a lot more than that, you may want to get another bid. But really, it's the advice plus the price would give you the confidence in the purchasing decision. If you're not sure if you're paying too much and you're new in business, get a few bids for sure. Definitely get a few bids, and you'll see the style of the agent, how they ask you questions. A new in business, if you told somebody I'm opening up a new business, they better spend 30 minutes with you and really go through understanding your business, not just I need liability because of my lease, and then they give you $1,000 price. That to me doesn't mean the same as the $1,000 price that somebody spent 30 minutes explaining things to me. When I make my purchasing decision, I'm going to decide who's going to be there when I do need some help and who gave me help when I didn't ask for it. And we work together. For me, I have my 3 people that are in my business life. It's besides myself, obviously, but 3 people: your insurance agent, your accountant, and your attorney. 3 business partners that I couldn't survive without. I just can't survive without them. And I pay a lot of money for that service, but I want to make sure that I'm at the best chance I can be successful. And those people I need around me. And if sometimes you got to pay to have that service, but knock on wood, I've been fortunate for 26 years because I think it's because I built a good team around me, and I don't make mistakes that I may have made because I was able to ask for help from those departments. I'm not experts in accounting and a legal department, so I rely on those resources to make sure I don't make unnecessary mistakes. I make a ton of mistakes, but I don't want to make unnecessary mistakes. So you want to make sure that when you're opening a business, it's that important to be protected with insurance and protected with an attorney and protected with an accountant, so that way we can be profitable and run a good business. And that's how you build a good reputation and all that goes along with it. So that's, my 2 cents of it. I do have a great attorney and a great accountant if anybody needs one. They're not cheap, but they have been with me from the first day, so 26 years already. So happy to share the local, local businesses that have made me part of my success.
Great, thank you. I'll give another minute for any questions. So far, nothing else has come in, just thank yous and great jobs. Minute.
It's nice that
Alright.
it's online too. It's nice that the video you can watch it online. And
Yes, definitely.
Again, I know it's just a lot of information, but at least now you have a better understanding of what what things you're going to just want to ask. And another tip, if you know more than, if after this class you talk to another insurance person, you feel you know more than them, move on to another person. There's a lot of insurance agents, but not a lot of specialists. So look at their Google reviews, look at, you can ask insurance agents for like their references. Who are some of your top clients that are restaurant owners, that if you're in your restaurant business, how many contractors do you insure? Ask for references. It's common. You're spending a lot of money in insurance. You're spending a lot of money. Do enough research on it so that way that money is well spent and you feel good about the relationship that you're going to have together.
Great, thank you. Great information today, exactly. So I want to thank Sandra. Thank you so much always for volunteering your time and giving such great information to our entrepreneurs. Everyone, wishing you a great weekend, nice weather, stay safe, and have a great weekend, everyone. Thank you.
Thanks, guys. Thanks, everyone.